The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. We're looking at the market trade on Monday, kicking off the week. Crude oil was the headline driver in the markets. We saw a lot of early strength across grains and oilseeds, but some of that faded as we went through the session. Here to walk through everything with us, we welcome in John Heinberg with Total Farm Marketing. John, good to catch up with you as we kicked off a new week on Monday, and I know you and I were chatting off air a little bit. Crude oil was definitely the headline driver, but little disappointing to see corn, especially wheat as well, kind of come well off those highs, and even soybeans did a little bit too on the day Monday. So maybe a bit of a disappointing finish to the session.
Yeah, obviously it was. I mean, you saw crude oil $4 or $5 a barrel higher, jumping 6% off that OPEC news. That basically that surprise announcement of that million barrel per day, or a little bit over a million barrel per day cut kicking in here the 1st of May. That goes back with their production cut from October. So they're taking some production off the marketplace. Again, their goal is to hopefully find stability in the marketplace. In the crude oil market, we'll see where that gets to here, but a heck of a day there. And that spilled over into the opening session, at least for the corn and the grain markets here. And obviously, we just didn't see corn hold those gains today. And there's a couple other factors that come into play. First off, obviously, we got those USDA numbers. That corn acre number a little heavier than we thought it was going to be. But I think the market had that fairly well priced in. And we're hearing some chatter, though. Brazil's also got corn getting harvested in this window, and they don't need it at this time frame. They need room for beans. They're pushing that right into the market. It sounds like it's undercutting our prices a little bit, to the point Brazilian corn for May delivery is more affordable to the global scale than U.S. corn. And I think that's just going to be a little lid on the market, that we can't run prices too high here and kill the demand that's been starting to really build, underneath this corn market, even as we got another export sale announcement this morning. On corn for the old crop supplies, or new crop supply, excuse me.
Yeah, new crop to Mexico on Monday morning. So nice to see that come through amid the Mexico-U.S. corn issues that we're having. But nonetheless, your point about demand, I find that very intriguing, and an intriguing thought, just because, you see the dollar lower on Monday and crude oil higher, and you think, oh, this is going to be supportive to money flow into the grains. And then, corn's performance just was kind of a downer. Now, I look at new crop corn, December, finishing that 567.5 mark on Monday. After the USDA reports now and getting us into spring planting season, what's your thoughts on maybe a target window here for new crop corn that we want to pay attention to, John? Is it around that 565, 570 window?
That's what I've been kind of telling the producers here. We're in that window in terms of the calendar. We typically see some strength in that new crop price as we get into the planting window. And obviously, we'll talk probably a little bit about the weather and those concerns that are out there coming in a few moments here. But again, if we continue to see some strength here, this is that window you should start building some base. And no, prices aren't exactly where you want them to be. I'm looking at that 550 line underneath this market. That was the July low for December corn. That was the recent low we just had here. To me, if that price level breaks, there's a lot of air under this market quickly to $5. So that's a spot I'm talking to producers about. Hey, let's get our puts put together for that area. And at the same time, if we get any strength in here, you probably want to start building some of those cash sales in. And then maybe if you're concerned about it, we own the possibility versus holding on to the long bushels, because if planting does come together and we do get these acres in the ground and the weather stays favorable, we're going to continue to see the supply side of the picture grow, and that's going to keep prices relatively heavy going into the fall. But a lot of variables out there, but right now you can't sit here and play the trump card and hope for weather and hope for this to happen, because obviously hope is not a strategy when it comes to marketing. And you got to make sure we're just making good, sound, disciplined decisions here. And then again, find a way to re-own the potential if you're concerned about prices going higher.
That's a great thought. Obviously, can't hope for weather. I know there are some issues sitting in front of us. We will touch on in a second. But to your point, being smart about your risk management, whether we're talking corn, soybeans, obviously a good run up in this bean market here off the lows we saw recently, back in March. Even wheat too, holding some good premium. I mean, these are good starting levels. I'm talking new crop here. These are good starting levels if you haven't started anything as far as your new crop marketing is concerned, John. At least I think so.
I would agree. Obviously we've had prices a little higher here in the past, and it's probably a good window to make sure you got something going. Hopefully you had something caught in those upper levels earlier as the market was starting its downtrend. But there's a lot of variability out there, with beans especially. Again, that weather card could come in a little bit more play there, given the numbers we got on Friday for the soybean market. But at the same time, hey, we're looking at around $13 on the board. Maybe that gets to your cash price with the basis for the fall. That's a heck of a starting point. And then get out there and own some calls into the summer. Re-own some of those sales. Hope they're your worst sales if the market takes off. We got a little premium working over top. Plus, you're still long some unsold beans. It's all about balance this time of year and making sure you kind of look at the scenario game and playing that out. If the market moves a little, what do I got in place to the upside or the downside? If the market falls apart or takes off, what do I got in place? And have those things out there for yourself right now, because I've said it before, the cost of doing nothing outweighs the cost of having some type of balance or strategic marketing plan as we get into what could be an extremely volatile year, as we see in the crude oil market with that headline announcement, here last night.
Well, talking weather, I want to touch on it since we've mentioned it a couple of times. I'm curious what you're hearing from growers, especially in the northern plains. We get that big prospective plantings number on Friday of, I think it was going to be some 800,000 corn acres added in North Dakota. Well, they're under immense snowpack with more on the way. I'll pull up on the video feed a map from our good friend Eric Snodgrass at Nutrient. I mean, this is what we're looking at here this early part of this week with this storm across the northern plains, just more snowpack. So to that point, what are you hearing from growers up there? It sounded like it's going to be a while before we're in the field and have any opportunity to be in the field.
I think that's going to start to become a little bit more buzz in the marketplace as we get further into April here. We get through the storm. We may be seeing some models starting to change a little bit here, but yeah, there's a lot of snow that's got to get moved out. Then we got to get the soil dry. It's going to take some time. And like you said, there's a good chunk of these acres, actually 1.3 million of the acre jump that we got is in the states of North Dakota, South Dakota, Minnesota combined. And, most of them are dealing with heavy snow or snow concerns over the next couple of days. That is not going to speed the process up. Just talking to some of those producers in that area, they kind of had some target windows and they're getting moved back pretty quickly here as we watch what happens with that snowpack. So that's going to be something the market's going to have to handle. Now, again, a prevent plant or a delayed planting type thing usually provides a marketing opportunity. With our technology, we'll still get things in the ground, and that could, weigh on prices in general until we, finally get those planted acre numbers in June and get an idea of what the prevent plant was. So again, this is that window where things can stay fairly active for a producer. I would continue to be a seller on strength. Even with the numbers we got on Friday, the trend, at least in the corn market at this time frame, was still overall growing supplies. And we need to just kind of make sure we're managing that. Now, if we get some changes on the next USDA report, maybe they bump demand back up. We'll see. That could change the picture a little. But until that happens, again, there's good value here, and producers need to stay on top of that.
Well, thinking demand as well, I want to touch on it quick. Export inspections today looked like corn, beans, wheat. Corn number 43.2 million. Not terrible. Any thoughts with what we saw and what we inspected on Monday?
Solid number. We needed to see that number get back over the million metric ton level, which we did today, which, last week was pretty disappointing, around 690,000, bushels moving out. But we're seeing some bean movement, which is still one of the things supporting that bean market there. And we haven't really touched on it. Those numbers on Friday were relatively friendly for beans with the smaller acre supply, and then the cut in the grain stocks. So we're going to watch that demand window a little bit more in beans. But, for corn right now, it's still about getting sales on the books and then getting those sales shipped. And that's still going to be the key going forward. We still got a fairly large Brazilian crop getting planted, starting to grow. That's still in anticipation of this market into the summer months. So anything we can get moving here now is going to be key. Can prevent some issues longer term in terms of supplies backing back up.
We're having a conversation today with John Heinberg of Total Farm Marketing as we continue on our program. And John, one other thought I want to pick your brain on here. Obviously, we see fund managers, a lot of feels like quicker movement on profit taking here with just some of the bank worry still lying underneath. You think that's maybe the case? Is that maybe a little bit of what we saw on Monday? Just, instead of holding that rally through the day, we just started to take profit immediately just because a lot of funds don't want to stick their neck out there too far with all the other outside worries in this market right now?
What was the trend going into these reports in terms of the grain market? Short wheat, short corn. They were bailing a little bit on that short position, but it was still a negative position overall in terms of net, short long combination, and a declining soybean position. So the funds were moving it to the sidelines. I think some of that risk off trade from the bank issues came into play. Now we're seeing some recovery off of that as, the market may have moved beyond it. Not that it's over by any stretch. We don't know when it can flare its head again. I highly doubt that those were just two isolated incidents. I think there's some other pressures that are out there. And again, that's more speculative than anything, but smoke, there's fire mentality. I think that does make the market just a little bit cautious overall. And again, the funds were working themselves to a shorter position in this marketplace. And then again, with this little pop in strength, there's a chance maybe to try to push that again and take some of those profits off here until we truly have something that's game changing. At least, again, like we said, the supply picture feels like for corn, it wants to get bigger going forward.
John, let's talk livestock trade. Not a great day on Monday in cattle or hogs. I look especially at the feeder cattle trade, sharp losses there, despite the corn market that came well off of its high. So what do you make of the moves in feeder cattle and then the live cattle complex on Monday?
The churn in the charts is actually very concerning technically here. I mean, we put some reversals in today on the live cattle chart, took June to new contract highs, still finished 90 cents lower. That's a hook reversal on the charts. Again, the money flow was kind of pushing that market out. So it's a window here. Do we see a little bit more profit taking off of that length after a pretty aggressive rally to get to this point? So we'll have to see. The other side of it too, this is maybe the counter side of that crude oil move. The inflation concerns, consumer dollar, those are things that are still very much on the front burner in the cattle market, as well as the hog market on the consumer demand side. If we see energy prices really start moving here, that's going to cut into that consumer dollar. Maybe that's some of the reason we saw some pushback on that livestock sector today as well. Now, the interesting part about cattle, cash trade was extremely strong. The weather coming across the northern tiers is not going to make things very easy, and that's probably going to help push that cash market a little bit again. So this might be just a couple-day blip. We'll see. The key is going to be follow through, in terms of the live cattle market tomorrow. Now, on the feeders, we saw a little bit of a fade, when the corn market rallied on Friday off those highs, and then we got the further follow through confirmation today. So things look technically a little weak in the cattle markets here. Again, we still got a lot of support out there given the fundamentals, but it may be another window just because of how aggressively we climbed the last last week or so here, that we take a little money off and maybe stabilize these charts a little bit.
Well, and thinking too with this cattle trade, obviously we've had a great run up. A lot of folks thinking that, the last couple of sessions, hey, this is our leg higher. But you brought up a good point with everything going on with the snowpack in the north. I wonder how that's going to impact the spring calf crop, et cetera. Obviously, these outside factors. For me, I'm really looking at both proteins here, cattle and hogs. It's going to be a matter of getting into summer grilling season, I think, before we can really assess just what direction these markets are going to go in, a wholesale direction one way or the other, John.
Agreed. Here we are, Easter weekend's in front of us. That's kind of typically that flip over point when now we start thinking about the grilling season. 1st of May, Memorial Day is right around the corner. So we're going to see the retailers start building those sales and those specials for that time frame. So that's going to be a pretty key window. I know we didn't touch on that hog market, there with that hog quarter, the hogs and pigs on Thursday. showed more pigs out there than we needed. Cash market just can't get any footing. April, the new lows again today. That poor market just can't get any traction. And then you go look at June, 91 to cash index at 75. That just looks heavy. But might be a window here too. We're watching some of the spreads between the front end hogs and back end hogs with those quarterly hog pigs numbers. Saw those farrowings down. That should be supportive of the back end, but heavy pigs on the front side. There's a lot of premium between those two contracts. So kind of curious how that might play out in the marketplace overall. So, it's going to be a very interesting few weeks here in the livestock sector as we kind of get moving to that summertime window. Getting some nice warm temperatures and getting things warmed up across the country helps fire up that grilling demand. Right now forecasts just aren't looking that way, at least for the majority of the Midwest.
How's dairy playing into that whole protein side of the equation here, John, as we look at milk and cheese and butter prices? I know we're getting past some key busy time frames for, spring sports and pizzas, et cetera, et cetera. So what's the outlook, do you think, for this dairy market right now?
Right now things had a heck of a run because of the weather in California, some of the production concerns and the flooding that got that front end contracts to run up and challenge the $20 handle. And now we're kind of flipping it over. Basically, that kind of looked like a prevent plan or a weather rally that we saw in the grain markets, and those are meant to be sold. Cheese trade was down fairly steady last week, right? About 15 cents lower on blocks, 17 cents lower on barrels. Saw that continue to trade lower again here today. So that just tells you we got to build up of supplies on the production side in this window. Now California may be getting past some of those weather issues. It's obviously going to take some time. They're still dealing with the moisture and the rain out there. But again, this market kind of priced that in, and now it feels like it's taking some profits off. So I think we missed an opportunity if you didn't get something going here off that spike off the weather. That now this market might settle back in and go challenge the bottom end of this range again, just because of where we are with overall production and demand.
Well, John, great thoughts. Before we let you go, any final ideas you want to share? Anything you want to reiterate for listeners today?
Again, stay active, stay disciplined. Things are going to change very quickly. We'll see how things start shaking out. Prevent plan or delayed planning type rallies are usually meant to be sold in that regard, unless we truly have something developing. So that's something to kind of keep an eye on, going forward. Again, just watch these next few weeks. Now the Father's Day is kind of that window. We want to get that base built, especially in the corn market in terms of some flooring mechanisms. Stay active and stay disciplined to your targets here.
Well, John, if folks want to reach out to you and get some advice there at Total Farm Marketing, what is the best way to reach out to you?
Sure, love chat with them anytime. Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com, and that website of ours, totalfarmmarketing.com. A lot of great information for producers. Again, love to just have a conversation. Feel free to pick up the phone, give me a call. Just love talking markets with anybody.
Well, John, we always appreciate your time and insight. We'll let you go. Thanks for joining us this week, and have a good one. We'll talk to you next week.
Sounds good. Have a great week.
That's John Heinberg with Total Farm Marketing. That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.